financial markets. Today is a rough day for equity prices and bond prices globally. As you can see, everything's in the red. The Dow Jones Industrial Average is down 1.3%, the S&P is down 1.68%, and the Nasdaq's down 1%. But what's even more interesting is usually when equities go down, the bond market rallies. Today, that's not the case. Global sovereign bond yields are higher, meaning the prices have sold off. This has happened in a correlated fashion with equity prices. And if you're looking for a culprit for this, we should look at the top news out today. And you see under this, U.S. stocks bonds sell off as market turmoil resumes, oil drops. So basically, let's fast forward this to bonds. Treasuries doing a decade tumbled anew, reversing gains after the Brainard comments, sending the yield to 1.72%, the highest since June 23rd. The probability of a Fed rate hike at next week's meeting dropped by 8 percentage points on Monday. This is in essence a rate increase. Longer dated securities, which have been outperforming in recent months, led losses. The difference between yields on the treasuries doing 2 and 30, a gauge of the yield curve, widened to 167 points, the most on a closing basis since June 30th. That spread tightening, has traditionally shown a recession. So the yield curve is actually getting a little steeper here. That's not necessarily a bad thing, but as longer term rates go up, it typically has a negative impact on on long-term projects. It just becomes more expensive. The 10-year German Bund rose 3 basis points to a little less than a tenth of a percent, which is much better than it was just 3 months ago when it was yielding negative 15 basis points. Also out today is the commodity market. Crude oil has gotten hit. It's down 2.89%, and that's on the basis of weaker than expected demand today coming out of the EIA. And a lot of people are starting to think that it's going to take more time for the balance between supply and demand to even out in the oil patch. And oil's getting hit. Oil's getting hit. Anyway, that's our update for the today. We hope that you have a great day. We'll look forward to speaking to you.